Hey everyone, I'm Cary Smith and I'm sitting here with Amar Shah. We're both from Client First Capital. And today we're talking about the exciting subject of taxes. And more specifically, we're talking about the importance of tax planning and how we can make sure that we're not paying more than we should and that we have the right timing and the right strategies to make sure we have a smart approach to our taxes. And so one of the things that I know with financial advisors, a lot of times in the big box financial advisors, it's hard to get really good, actionable tax strategies. And I know personally because I used to run a large financial advice center, and we didn't allow our financial advisors to give specific tax advice or create tax strategies, just because in that setting it was hard to know a client well enough and know all of the details about their situation in order to be able to create a good tax strategy. But a lot of times with family firms and smaller firms, we're able to make that connection and go a lot deeper and actually create some tax strategies. So Amar's going to talk to us a little bit more about just that process, what it looks like, and what some of the strategies are. So Amar, I'm gonna turn it over to you.
Yeah, absolutely. And Carrie, you're being quite modest there. I think you led over 500 financial advisors in your complex there.
Yeah, that's true. That's correct.
Yeah. And I was one of those advisors that, we're told to stay in our lane. And, taxes are complex and taxes have many different pieces to the puzzle. And what I want to do today is to kind of walk through, some kind of tax planning that we would do for a client to review their situation or what we're looking to do before the tax year ends. Now, there are thousands of things that we can go into, like quite literally, but we're just going to give two examples today. So here's a tax report that we would create for a client. And I would say the first thing is just to have awareness of where you are. So key figures in terms of total tax, taxable income, how much long-term capital gains you have, how much is short-term capital gains, where you stand within the tax bracket. So like you can see this um, example, this individual is right in the middle of the 22% tax bracket. So there are some planning opportunities, right? Um, so here's example one. You know, in terms of itemized deductions, there's about $20,000 in itemized deductions that they had. But the standard deduction for this example was 30,700, right? So this is an older married couple that's doing the standard deduction, plus they're over age 65. And you'll see here that one of their deductions that they itemized was charitable contributions. When you do standard deductions, you're not getting the tax benefit of that charitable contribution. So one of the ways to take advantage of this situation is, number one, are they doing QCDs directly from the IRA? Number two is maybe consider doing like a donor advised fund, lump sum funding that for the next 5 to 10 years. That could be done, and they would be above this $30,000 amount and be able to itemize, so they'll get the benefit of those charitable contributions in that year. Plus, there are other things that that they could have deducted, like healthcare expenses, other taxes paid, and then in the subsequent years they could go back to standard deduction, right? So that is one way that we can help uh, guide clients to optimize their tax planning. Another way is to kind of look at Roth conversions, right? So if you were just looking at this income brackets here, for somebody that's in retirement, you would say, hey, there's about 70,000 till the next tax bracket. Let me convert 70,000 and do a Roth conversion, pay the same tax rate, and then when you go file your taxes, you'll have this big surprise. And this is what I want to kind of look at here is when you do a Roth conversion, it's not just your tax bracket, it's also where your Medicare Part B and D premiums are. And it's also what the net interest, investment interest tax brackets are as well. So there are a couple things. So this is the IRMA calculation, modified adjusted gross income. If you did a $70,000 Roth conversion, that would bump you out of the tax brackets for Medicare, and you would have that extra payment. And this is per person. So we have this other chart that I like to show here to kind of visualize this part. If you added let's just say $70,000 of income that from a Roth conversion, you would trigger net investment income, which is 3.8%. Plus, you would have gone through two Medicare annual increases per person, right? So you come back to the table and say, well, what is the right amount, right? And if your goal is not to increase any other taxes and stuff like that, maybe looking at this and saying, all right, well, this looks like at 25,000. 25,000 would not increase my Medicare premiums for 2025. And that's what we would look at, right? In doing that type of planning work. And so these are two quick examples to kind of show you the benefits of planning and why tax planning is so important.
Yeah, Amar, I think those are really good examples. And I know that those two examples are just the tip of the iceberg of all the things that you're able to cover with clients and as you create that plan. And then, one of the things that's on my mind also is just, it seems like in the planning, sometimes we want to pay some of the taxes now so that we don't have to pay them later. But what's the key benefit of doing that? What's one of the risk of not doing that? Maybe is another way to ask that question.
Yeah, I get this question all the time from clients as well. It's like why do I want to pay more taxes now? Right? Like I want to kick it down the road as long as possible. So going back to this, I would say two things. One, the Tax Cuts and Jobs Act is sunsetting in 2026. So we already know tax rates are going to go up, right? Like the highest rate will become 39%. And these brackets that you see here, the difference between 89,000 to 190, those are going to shrink, right?
Okay.
The other thing that you have to keep in mind is that is a widow's tax, and we have a great article that Cherie wrote about on our website, talking about all the things that you need to do from a planning perspective if one spouse were to predecease another. So it's a great article. You can go there and also subscribe while you're there. But the main point here is these brackets, these tax brackets, they're going to shrink, right? You're going to go from married filing jointly to a single taxpayer's tax brackets. So all these tax brackets will shrink, and you'll lose a standard deduction. So right now, as a married filing jointly in older years, you have 30,700 as this combined standard deduction. That will be cut in half, right? And so what we know is that most people have the same amount of expenses, so their income stays roughly about the same. Even though their Social Security may go down, they'll take more out of the IRA, so their income's roughly the same. But you're going to be in a lot worse tax situation. And I think that's important to see, because that's going to be over a period of time that will happen. And Cary, I think you have some statistics about that, right?
Yeah, Mar, one of the reasons I think we worry about the long-term effect of taxes and the importance of planning is we don't want to overburden, our spouse, once they're alone. And, we know typically women are going to outlive men, between 5 and 7 years. Also, it's common for men, for their wives to be, 5 years younger on average. So, those two combined, being younger and living longer, means that they may be dealing with the impacts of these taxes for another decade or more, once their spouse is gone. And during that time, that could be a big impact on their taxes and really their standard of living.
Yeah, and that's using the averages, right? That's
Right.
saying that we're living a long, healthy life. and and one of us pass. You
That's
know,
right.
after age 60, you'll find that mortality rates start to increase, right? And just like, medical events, healthcare events can happen, right? And so this is part of good planning. And Cary, if anybody would like to do their tax planning or just get like a back of the envelope idea of where they stand within these brackets, we're more than willing to help.
Yeah, Amar, this, the world of tax planning can be complex, but if you've got someone to guide you through it, it can take some of that complexity away, and also just make sure that you're not making any mistakes and that you have the right timing as well. And so if this subject or this discussion appeals to you, I would, recommend reach out to us at Client First Capital. And as Amar said, we can do a basic analysis and then go from there. So yeah, I think that's a good way to move forward.
Yeah. All right, Cary, thank you.
Okay, thanks, Amar. See
Yep.
ya.
Bye.
Bye-bye.